Hi, I'm Rosie Sussick of One Man Band Accounting, and I help cake living freelancers in the UK do their own tax returns, and I offer retreat coaching and courses. So today I want to talk to you about cash basis. As part of my How to Do Your Own Tax Return course, I have a Q&A every month, and most months this is a question that comes up, so I thought it was about time that I actually did a video about it, so here we are. Now, cash basis is something that you're going to find on your self-assessment tax return, which generally speaking, if you're a sole trader, just get shortened to tax return because it's easier. Now, on your self-assessment tax return or your tax return as a sole trader, you need to do your accounts in the self-employment pages, one set of pages per business. So, and the cash basis is part of this. Now, if you want to, first of all is, what is cash basis? So you're a sole trader, you're doing your self-assessment, you're doing your self-employment pages, and on the first page, at least at the moment, unless they change it, one of the questions at the bottom is, are you going to be using cash basis? To be honest, they don't actually give that much explanation of it, and as you may have already discovered, quite often HMRC's explanations, while they make sense to people who already know what they're doing, quite often, because they're having to explain things to such a wide set of people, quite often you will read them and you go, sorry, but the explanation doesn't mean anything to me, help. So what it means is that there are different ways of claiming expenses if you're a sole trader doing your accounts through your the self-employment section. And what it means is that there are two ways of doing it. Now, the cash basis was brought in because there are a lot of people who just can't cope with doing expenses the usual way. So we're talking about, well, for example, accountants who are doing the tax returns for their clients. And some people do not keep the records that they're required to keep. So, I know you'll be doing this already. I've yet to have a client who's doing their first tax return who's never kept anything. I know this isn't you. You'd have kept things. You might be worried that you haven't, but believe me, if you're watching this, you probably have. Some people do not keep bank statements. They do not keep receipts. They do not even keep the email stuff in their email that they haven't got around to deleting yet. They actually throw everything out. They're just not interested, or they don't lose it, or they just chuck it in the bin. So it's been very, very difficult for their accountant actually trying to put their legally required tax return and accounts together because they have no information. And this basically left them in a bit of a bind. So the first reason that this was brought in is to actually mean that those people can actually do something about it. You don't just have an estimated tax return, which frankly isn't very good for anybody, including them. The second reason is that the cash basis means that there are a fixed way of you claiming expenses. So this means that if you tick the box saying cash basis, then you can, it takes less time and it's easier than doing it the other way, the way that, for example, I'll show you in my How to Do Your Own Tax Return course, or you can read on my articles. But there's a balance to that. Yes, if you're incredibly overrun with tiredness and everything, then you can do it. But the balance to that is you don't actually get access to all the tax relief that you could. So the first thing is, what is cash basis? And cash basis is a way of claiming your expenses that is fixed and it's easier. It's a bit more technical than that. There's other things involved with it. But to be honest, for practical purpose, you don't actually need to worry about that too much. For you, that's really what it means, is you have cash basis is a fixed way of you claiming expenses, which doesn't take very much time, but you do have to be aware that if you do that, you will not get all the tax relief that you need to. And from my perspective, generally speaking, the lower the profit, quite often the more you need the tax relief, because the lower the profit means you're starting out and you actually need to get more of a break than when you've been going a while. But like I said, it's a choice. So that's what that means. Now, unlike, for example, working from home expenses or your mileage, mileage meaning van, car, bicycle, that kind of thing, unlike those, with this cash basis, you can choose year by year whether or not to pick it. So, for example, if you're doing it for the first time and say you've got a newborn baby, or suddenly someone's ill and you really cannot face learning what to do, you can just pick the cash basis and just let the whole thing go and accept that you're probably not going to get as much tax relief on it. By the way, claiming the tax relief is also like claiming tax deductible expenses. So what this means in practice is that you have all your business income comes in, and then you take off the tax deductible expenses, and then you're taxed on what's left. So it means you pay less tax. So one downside of the cash basis, it's a lot easier, but on the other hand, you may end up paying more tax because of it. So it's like a lot of things. You need to look at it and just decide. Sometimes it's worth it, and if you're watching this in January, then it might be worth you doing the cash basis. If it's sort of like the 29th of January at this point, then it might be worth doing it just so you can meet that deadline. But be aware about that one. So the first thing is, what is cash basis? Is that as far as you're concerned, it's a way of claiming your expenses that is extremely quick and easy, but that also means you don't get all the tax relief that you could. There's also, if you go and Google this, it's also got more to do with actually the way that income comes into your business and all that kind of stuff, but that is, to be honest, slightly more technical. And if your position of actually being attracted to not having as much tax relief just because it's a lot faster, then probably that's not actually going to be so much of an issue for you anyway. If you're worried about this, and like I said, I've got a monthly Q&A in my How to Do Your Own Tax Return course, say, for example, you could actually become a coaching client, and we can talk through all the expenses and the tax deductibleness and all those things that apply to you, and you can then choose whether or not to actually do that work this year, or you might just choose this particular time to use cash basis, and the next year, actually next tax return, actually apply all the information. So like I said, you can have that support as a coaching client. So the second thing is, who is it for? So say principally, my personal opinion, it was brought in to help accountants who have clients who have no records at all, because say put them in a bit of a bind. It's also there to help you if you really can't face doing it, or you're suddenly behind, it's suddenly the end of January and it's like, it needs to get done. To be honest, even I would say, if it's the 29th or 30th of January, getting it done on time is actually more important than tax relief. It's more important than a lonely tax bill. Always be on time, because you never know when you might need HMRC on your side, because sometimes stuff happens. And if you have a good, consistent record of always filing on time, it can help HMRC kind of like be on the side a bit more if you need, extension of a deadline or anything else in future. So again, the other thing is cash basis right for you? So say, just to recap, if it's right at the end of January and you don't know what you're doing yet, cash basis can be a good way of just getting your tax return done on time. If you're not too happy about losing the tax relief part and you do want to learn, but you do to make the deadline, a good balance to that is becoming a coaching client now, and we can go over these things, we can talk about them. You can do your tax return with a cash basis, but you know exactly where you are for the next tax return, which after all, if this is in the end of January, is only a few months' time. Is how do you claim cash basis? And it's actually very simple. I said this may change because HMRC can change the format of the tax return, but at the moment, at the first page of the self-employment pages, they ask you basic questions about your business, what's the name of your business, and they also ask you, do you want to claim cash basis? And there's a box, and if you want to claim it, you tick the box. Most of you will not want to be ticking the box, but that's what the box is for. So if you say, want to do the way in my How to Do Your Tax Return course, then that's fine. That's what the box means. So this is often actually where the question comes up. What is this box? What does it mean? And that's what the box is. So you don't tick the box. But I say if you are attracted by it at this point, cash basis is a per year decision. So you can tick that box if you just want to get it out of the way for this year. And that doesn't actually stop you learning about it and then applying it next year. So I say it's completely up to you. It's not like it is with home working expenses and mileage, like for your car, your van or your bicycle, where you can't change it until either you move home or you change your vehicle. If you want to know more about home working and mileage expenses, I've got some articles on my website, and I've also got the ebook guide, so you can go and download those, and they're all included in my How to Do Your Tax Return course as well. So I'm Rosie Slosick. I'm a tax return coach for cake living freelancers in the UK, offering retreat courses and coaching.